Yes. So this is the question again. We are doing it for ARR. Determine ARR from the following project. Cost of the project is 5,20,000. Is the screen visible? Screen अच्छे से दिख रही है? Okay. Okay. Annual profits after tax and depreciation. We have annual profits after tax and depreciation. So after means already tax is deducted and depreciation is also deducted. Okay. So we have annual profits after tax and depreciation. How many years we have? 5 years profit we have. 30, 50, 70, 90 and 110. These are the profits of 5 different years. Estimated life of the project is 5 years and estimated scrap value is also given 20,000. Okay. Now scrap value is also given. Now see, while calculating payback, you need to add the depreciation back. But while calculating ARR, you don't need that. Okay, you don't need that. Fine. Let's start with the formula. ARR method. I'll open up. Wait. Okay, now we have sum number 12. We have ARR method and the cost of the project is, what was the cost of project? Cost of the project was 5,20,000.
Five
Very
lakh
good. Yes,
twenty
very
thousand.
good. 5,20,000. See, and now we are doing ARR method. So while doing ARR method, we need net profit after tax, which is already available in the question. No need to filter it. No need to refine it. Already filtering is done. Already depreciation is deducted. Tax is deducted. And we have given a ready-made answer, net profit after tax. We don't need to do anything because it is written clearly. You see here. Look at the question. Annual profits after tax and depreciation means after is the word common for depreciation and tax. After tax and depreciation means depreciation is also deducted, tax is also deducted. This is what we need for ARR. If we were doing payback period method, we would have added back the depreciation. But now, because we need net profit after tax, we don't need to add back the depreciation because what we need for ARR is net profit after tax. Okay. So the first step is step number 1 is calculation of average net profit after tax. This is my first step. So are you given net profit after tax? Is that amount readily available to you? Yes. Yesterday it wasn't. But today we are made available with ready-made amounts. What ready-made amounts? Net profit after tax. But giving or coming to a conclusion that net profit is after tax is what we need in step number 1 is wrong. We don't have to take net profit after tax. We have to take average net profit after tax. So first of all, net profit after tax is divided in 5 years. So we have to take the total of all the 5 years. That would be my total net profit after tax. Now that total will be divided by number of years and the answer will be average net profit after tax. So average net profit after tax is equals to, what is the formula? Total net profit after tax which is available today divided by number of years. Okay. What is total net profit after tax? Calci लीजिए 30 plus 50 plus 70 plus 90 plus 110. I think total is already given in the question. What is the total? What
Three
is the
lakh
total?
50,000.
Yes, very good. It is 3,50,000 divided by what? Divided by number of years. So how many years the profit has been given? For 5 years.
5.
Yes. So the answer will be 3,50,000 by 5. Yes, 5 years is correct. Now 3,50,000 by 5. What is my final answer?
70,000.
70,000. Rupees 70,000. Okay. Rupees 70,000 is my first step answer. What is this answer known as? This is known as net average net profit after tax. Okay. Now step number 2. What is my step number 2? Calculation of average net profit. Sorry, average investment. Okay, average investment. So I will write it as a short form. AI is equals to, now you have to stop and think here. You have to stop here and think that the formula of I mean, which formula of AI has to be applied here? Because there are two formulas of AI. Average investment has two different formulas. Either of them has to be applied. Okay. Now, when we calculate AI, there are two possibilities. When salvage value is given, when salvage value is not given. So when salvage value is given, not given, the formula will be simple: cost of investments upon 2, just as we have done it yesterday. But when the salvage value is given in the question, see, look here. This is the salvage value. Estimated scrap value is 20,000. Can you see the last line of the sum? Yes. Estimated scrap value is 20,000. It is given in the question. That means a project that we are investing in has a scrap value of 20,000. The scrap value is not zero. It has a scrap value of rupees 20,000. Okay. So when scrap value is given, the formula will be little lengthier. What will be the formula? Cost of investment minus scrap value divided by 2, and this has to be put it in the bracket. We have to put this whole equation into a bracket, right? And then after bracket, we need to add back the one which was deducted. See, inside the bracket, scrap value is deducted, and outside the bracket, it has to be added back. Scrap value or salvage value, it is one and the same thing. Again, add working capital, additional working capital. Okay, this is the formula. This is the formula that we have to apply. Note this formula somewhere. I mean, this is very important. Okay, now cost of investment. What was the cost of inside the bracket? We have to write 5,20,000. That is my cost. Minus 20,000 was my scrap value, if I'm not wrong. Divided by 2, bracket close. After bracket, plus 20,000 again. And additional working capital is not given, plus 0. So if you don't write anything, that's okay. If you write plus 0, that is also okay. Okay, now 5 lakh 20 minus 20 divide by 2. 5 lakh 20 minus 20. Is it 5 lakhs? So 5 lakhs divided by 2 is 2 lakh 50. Yes, 2 lakh 50. 2 lakhs 50,000. Use Calci. You will come to know what are we doing. 5 lakh 20 minus 20, answer is 5 lakhs. 5 lakhs divided by 2 is my answer would be 2 lakh 50. And now the bracket is opened. Nobody will keep a bracket now. Okay, because now it has been solved. So again plus 20,000.
20,000.
Yes, plus 0 means no need to write that. Okay, so my final answer would
2
be
lakh
2
70
lakhs. Very good. 2 lakhs
70,000.
70,000 is my final answer. 2 lakhs 70,000 is my final answer. Okay. Step number 2 is my step number 2 final answer is 2 lakh 70,000. Clear? Now step number 3 is calculation of ARR. Now what is the formula for ARR? Very simple. Average, I write on short form, average net profit after tax divided by average investment, I'll write on short form AI into 100. Why to do into 100? Because we need the answer in percentage form. We need to have answer in percentage form. Okay. So my ARR would be, what is my ARR? Tell me. Average net profit after tax. What was the answer of average net profit after tax? We have calculated in the step number 1.
70,000.
70,000. Very good. 70,000 is the answer of step number 1. Average investment step number 2. 2,70,000 into 100. So what is the final answer?
25.9.
25 point, yes, 93%. This is my final answer. ARR. Is it clear? See, this sum is so simple. I mean, even if you take up this formula, the larger formula of I mean, it's not difficult. The only challenge is to remember the formula, and the only challenge is to see which formula has to be applied, is the task. Otherwise, I think ARR method is very easy. So you have 2 minutes to copy down the sum. Just 2 minutes, huh? Please be little fast. I need to complete ARR method today. From tomorrow, I will start NPV method, the new method. ARR method में हम लोग को time इतना waste नहीं करना है, ठीक है? So start copying down the sum. If you have not done, I'm giving you 2 minutes. Be quick.